I'm going to share my screen with you guys, and then we are going to get started. All right, please give me a thumbs up, a smiley of your preference if you are good and you can hear me loud and clearly. Do let me know. Do let me know. Okay, thank you, Bahlali. Thank you, Simtembiso. Thank you, Lebohang. Yes, thank you, Ntabiseng. Okay, awesome stuff. Right. So now that you guys can hear me, let's get this show on the road. Let's get this show on the road. So I want us to start with 2015. With 2015. Okay. And question 1 there on 2015. So I want you guys to open up your question paper. All right. And then while we go through this, then we're obviously going to go through the suggested answers, and then you guys can ask whatever questions you want to ask based on what we are going through. All right. So the first question that they say, complete the following table by indicating for each transaction in which journal give name in full, it would be recorded in, and which source document would be used to make the particular entry. You need to specify if the source document will be original or duplicate. Remember I said original, we're the customer, we're the ones buying, all right? Or we're the ones getting the credit note. Duplicate, we're the supplier, okay, in that transaction, okay? So first things first, let's see here. Okay, first things first. Owner increases capital contribution. Okay, that's an example. Cash receipts journal. All right, we know that it's a journal we use whenever we're receiving money. Then the source document is obviously then your duplicate receipt. All right. And then question 1, we have cash sales. Okay. We have cash sales. So then what should be your answer there? Somebody tell me in the chat, what's the name of the journal that we're going to record cash sales in? Somebody tell me in the chat, and then somebody else tell me, are we going to, what type of source document are we going to have? Yes, 100%. Thank you. Mtabi saying we're going to record that in the cash receipts journal. Okay. And then what type of source document are we going to have? Somebody tell me. And is it going to be an original or a duplicate? What is it going to be? All right. Is it going to be a duplicate or an original? Oh, people are quiet. People are quiet. Okay, just in the interest of time, let me give it to you. All right, I think I heard something there in the chat. Yes, it's going to be a duplicate. Thank you very much. Okay, it's going to be a duplicate cash slip. All right, or a duplicate receipt. Okay, here on the answers, let me show you what I wrote. I wrote duplicate cash invoice. Okay, that could also be right, but I'd prefer that you go with duplicate cash slip or duplicate cash receipt. Okay, right. So that's the first one. Now let's get back to, so maybe let me stay on this, let me stay on the answers there, and then let me read out the questions on my hard copy. I think that'll also save us some time. Next question they had there is credit purchase of trading inventory. Okay, which journal is this going to affect? Okay, it's going to affect your creditors journal, because remember, creditors journal is whenever we're buying goods on credit. Okay, and then obviously, since we're buying in this instance, it's going to be your original, because we're the customer here, credit invoice, okay? Original credit invoice. Then we move to the next one. Credit purchase of office equipment, okay? Again, we're going to record that in the creditors journal. We're buying on credit furniture. Again, it's going to be an original credit invoice, okay? Because we're the customer, we're the ones buying the furniture, all right? And then we have credit sale of used equipment, credit sale, okay? Credit sale of used equipment. So here again, ooh, what? They didn't tell us the nature of the business, right? But this should actually be your, general journal. And I'll tell you why I'm saying that. The debtors journal, so here I made another mistake. My apologies. The general journal, sorry, the debtors journal is for sales of trading inventory only, okay, on credit. Sales of trading inventory on credit. Okay, so I remember at the time that I was doing this, it was late at night, so didn't get the type of rest I should have gotten. So yeah, there are a few mistakes here and there, as you guys saw also yesterday, but we're correcting them as we go. Then you're going to have a duplicate credit invoice. Still the same. Sorry, actually, it should be a journal voucher. We know that every time that we enter something into the general journal, it's through a journal voucher. Okay? Right. Then finally, last one, we have rebates with regard to transactions previously entered in the debtors journal. Okay? And that's going to be your debtors allowance journal. Remember, we use the debtors allowance journal for rebates, when we've overcharged our customers, when they're asking for rebates, and when they're returning goods to us. And that's going to be an original. Sorry, this should be a duplicate credit note entered into debtors journal. Yep, this should be a duplicate credit note, because remember, we're the suppliers in this case. Okay, so this should be duplicate, not an original. Ooh. A lot more mistakes than we should have right there on 2015. Okay, but let's go to question 2. And question 2, we have the journals. Okay, there's no running away from journals, guys. Test 2, or should I say in your test, they are definitely going to ask you to do some of the journals there. Okay, and under the required, I'm looking at the required, in your question paper, it's on page 5, it says prepare the following journals, okay, for March 2015, okay. All amounts are inclusive of VAT unless VAT is not applicable, okay. Remember, I told you guys that please, on your devices, have the question paper. We're in 2015, okay, for those of you maybe just logged in. All right, so have the question paper on your device, and then, yeah, if you can have it on your mobile device, even better, because then that way on your PC, you can obviously be looking at what is on my screen, all right, what I'm sharing with you, so we can be together as we move along. So, as I was saying, they are telling us that to prepare the journals, all right, for March 2015, all amounts are inclusive of VAT unless VAT is not applicable. Total the journals at the end of the month, as marks will be awarded for this, okay? Round all amounts to the nearest rand, okay? They want us to do the debtors journal, debtors allowance journal, and the general journal. Okay, so we're going in over here. Okay, and then the second bit of that question, they're saying study March 2015 cash book receipts, okay, and then answer the following questions. Okay, interesting stuff. Okay, but I think this is more theory than anything. Why is there an analysis of receipts column and a bank column in the cash receipts? It seems that this is a duplication. Ooh, good question. Which column is the main column in the cash book receipts, and does it represent a basic debit or credit? Okay, which column is the main column, all right? And then why does the total from the cost of sales column not form part of the total of the bank column? Not form part of, okay? Why is there no amount in the analysis of receipt column on the 1st of March? Okay, why was no output VAT calculated on the 1st and 26th of March? Yes, so some very great theoretical questions. I don't know if I actually did those. Okay, but anyway, so they're asking those questions in relation to the cash book receipts or cash receipts journal. All right, up top in the question, they say you are the bookkeeper. All right, the business is a registered VAT vendor, trades only with registered VAT vendors. All right, the business charges, let's just look at that as 15% on all its sales. All amounts are inclusive of VAT unless VAT is not applicable. As a bookkeeper, you have been provided with only the source documents for the month of March 2015 necessary for the preparation of the journals specified below. The business uses the perpetual inventory system, and trading inventory is marked up 100% on cost, okay, before any given trade discounts, unless otherwise specified. Okay, DIN, duplicate invoices, DCRN, duplicate credit notes, DR, duplicate cash receipts, DCS is duplicate cash slips, DR is duplicate receipts, JV, journal vouchers, and PCV, petty cash vouchers, respectively. Okay, so now we know the codes. Now we can read through our transactions. Okay, so on the first there, it says additional cash contribution directly deposited into the business bank account. Okay, then the next one, so that should go in your cash receipts journal. Okay, the next one, they say credit sale of trading inventory. The markup on the trading inventory was 35% on the selling price. Okay, so there you can see I've actually written out what the markup that you should have there. All right, so firstly, credit sale, that's obviously going to affect the debtors journal, so we put DJ there. Then on the 8th, it says cash sale of trading inventory, markup 100% on cost price. All right, so that's going to go into your cash receipts journal. Okay, then on the 12th, it says credit sale of trading inventory. All right, the moment we see that, we know that should go into your debtors journal. And there you can see 38,700 less a 15% trade discount, 100 on the cost price. Okay, cool. Then the next one, trading inventory sold on 12 March returned. Trading inventory sold, okay, on 12 March returned. All right, since it was returned, that means it's the debtors allowance journal. Okay, then cash sale of trading inventory, cash sale of trading inventory. All right, we know that is the cash receipts journal, and then they say markup 100% on cost price. Then the next one, it says received the rent income from C. Dixon. All right, received rent income. Okay, so that's cash receipts journal. Then credit sale of trading inventory, markup 100% on the cost price. Okay, credit sale, debtors journal. All right, then trading inventory sold on 25 March returned. Okay, trading inventory returned, we know that that is your debtors allowance journal. And again, there you can see under document, source document number, it's DCRN, so for duplicate credit note. Okay, then we go on to the next one. It says received a check from Zook Traders, part payment on the account. Received a check. All right, received a check, and there you see DR, all right, for duplicate receipt. So that obviously is then the cash receipts journal. Then cash sale of trading inventory. The inventory was marked up by 45% on the selling price. Cash sale, that should already tell you. This is the cash receipts journal. Then finally, can you believe it? Grant Zook traders a settlement discount. Okay. All right, so that's the general journal. That was a settlement discount. And there you can see JV under the source document. Okay. So here, can you see they actually have given us the amount that the settlement discount went for, 684. Okay. So again, we've listed all the transactions and which accounts, which journals they affect. Then we say, okay, which journals are we doing again? We're only doing the Debtors Journal, Debtors Allowance Journal, and the General Journal. So the first transaction that we have in the Debtors Journal, that's where we're going to start, was on the 2nd with C. Tatum. Okay, and that was for 150,480. So we plug that amount in. Then we say, okay, we know this was a sale of trading inventory. We know then there's output VAT that we owe. We calculate that. Obviously here again, guys, I was calculating on 14%. So your amount should be slightly higher than this 18,000. And then the difference between that and output VAT and the debtors control is how we came up with the sales amount. We then use the sales amount to calculate our cost of sales, okay? And there we had to use our model. They told us that the markup was 35% on sales. Can you see here what I've done? 35% on profit, 100% on selling price, and then 65 obviously is then what you have as a cost. So what we want is cost. Can you see where my cursor is? So cost is 65. What we have is the selling price, all right, times what we have random amount, which is that 132,000, which will then give us 85,800, okay? And then we have our cost of sales, all right? And then we have our cost of sales. So again, you can see how I've also referenced, okay? Right. So let's move on to the next transaction. And guys, if you have questions, please ask. Again, I'm doing this for your understanding more than anything else. So the next transaction we had was credit sale on the 12th. Credit sale of trading inventory. So we take that 38,000. Okay, we know that it was less 15% trade discount, so we need to remove that. So we say 85% is what we then obviously sold these goods for. So 85% of that, we get 32,000. All right, and we plug that in there. We calculate our VAT again. Mine's on 14%, but yours will be slightly higher. Okay, we got that, and the difference between will be our sales. But here's something interesting. Okay, here they said 100% on the cost price. 100% on the cost price. So here, guys. So here's another mistake. So take note. Another mistake is we're supposed to say, okay, so yes, the model is fine. Said 100% on cost price. So cost is going to be 100. Profit is 100 because markup is 100. Then selling price is 200. But here we were supposed to calculate what would be the selling price exclusive of VAT if we had not sold these goods at a discount. Because remember, just because we sold these goods at a discount doesn't mean that the value of the actual goods is any cheaper, all right, or any less than what it should have been. Okay, so I'm going to do this in the chat because I want to make sure everybody's with me. Okay, let me actually look for a calculator on this. Okay, cow. All right. I want you guys to have the correct amounts there. Okay, so let's do this. So initially these goods were valued at 38,000. All right, 760. Okay, then what we are saying is, okay, cool, that was the price exclusive of the discount. Okay, So then we say, okay, what then is the VAT exclusive amount? And now I'm just going to be consistent because I want it to be on, since I've done this on 14%, I'm just going to be consistent with that. So we then say 100, okay, times 100, okay. That's what we want. We want the VAT exclusive amount, okay, then divided by 114, okay, because what we have is the VAT inclusive. Okay, we get 34,000. So here in sales, it would have been 34,000, assuming we had not given a discount, a trade discount. Okay, then that 34,000, this is now what we're going to then use to calculate our cost of sales. We say times 100, what we want is cost, which is 100. Okay, then divided by the selling price, which we know is 200. Okay, which then gives us the 17,000. Okay. Again, guys, I was operating on 14%. Okay. So your cost of sales there on C should be 17,000 and not 14,000. Okay. Again, just another take note of that mistake. Okay. But you guys' amounts will be different. But what I'm trying to ensure that you get is the principle. Okay. Cool. Right. So that was your second transaction under the debtors journal. Next one and last one was on the 25th. Credit sales of trading inventory, markup 100% on the cost. So can you see our model is exactly the same? Profit we know is 100 because markup is 100. Cost is obviously then 100 because it was on cost. Okay. And then selling price will obviously then be 200. Cool. We've got our model. Let's plug in our amounts now. Okay. So there's no discount there. So we take our 116,964. We plug that in under debtors control. We calculate our VAT. We get our VAT. Then we know, okay, our sales is 102,600. Then we say, okay, but we want to get the cost of sales. Okay. So again, we say, what do we want? What we want is cost, which is 100. What we have though is selling price, which is 200 times the 102,600 gives us the 51,300, and that's how we get that there. Okay, makes sense? All right, awesome stuff. Okay, so that was the debtors journal. Guys, any questions? Any questions? Oh, so Busi has a question there. Right. Sorry, sir, for taking us back. For the first transaction of the DJ, how do we know that the SP is 100? Okay, so let's go there. Let's look at this thing. Let's investigate. Right. So the first transaction there in the debtors journal was this one here on the 2nd. And there they said, if we read the transaction, it says credit sale of trading inventory. The markup on the trading inventory was 35% on the selling price. Okay, so because they said, thank you, Busisiwe, for the question, because they said on selling price, okay, that means that selling price is then equal to 100%. So here's the thing that we always need to capture is whatever they say, whenever they say on, whenever they say above, whatever then follows is then going to be equals to 100%. Okay. So let me show you. Let me give you another example. If you look on the transaction on the 12th and the transaction on the 25th, so let's look at what they actually said there when it comes to the markup. They said 100% on the cost price. Can you see that cost is 100%? Right? Because they said on cost. If they had said above cost, we also would have made cost 100%. Okay? If we go to the 25th, it says credit sale of trading inventory, markup 100% on the cost price. Again, can you see? We made cost price 100%. Okay? And in the first one, as you highlighted, we made selling price 100%. So let's go back again, just read it. It says 35% on selling price. Can you see? Selling price was 100%. Okay. So Busi, just give me a thumbs up there if I've answered your question. All right. I hope that answers your question. All right, awesome stuff. Great stuff. All right. So guys, at any point in time, if you want me to go back, by all means, it's all good. All right. I just want to make sure you guys understand. All right. So let's keep it going now. Let's move on. But if anyone has a question, by all means, do ask. So the next thing they wanted us to do was the Debtors Allowance Journal. And in the Debtors Allowance Journal, we had already ticked off that on the 13th, that transaction, they were returning trading inventory, all right? And that was for 1,938, okay? And that was in relation to which transaction? They said trading inventory sold on the 12th. Okay, so we put this into our debtors control because they told us that we can assume all amounts are inclusive of VAT unless told otherwise. So they didn't tell us this is exclusive of VAT, so we plug that in the debtors control because we know debtors control column is always inclusive of VAT. Then we know, okay, we need to calculate our input VAT because now we're reversing some of the output VAT that we had when we first sold. Okay, so we calculate that. Again, I'm calculating on 14%, okay? But you guys, yours is going to be slightly higher, okay? And then finally, the difference will be then the sales return or your sales amount there, okay? Then we then need to calculate the cost of sales. But can you see something interesting? They didn't give us what markup is, all right? So we have to go back to the 12th, which is a transaction right before, and we say, and we see 100% on the cost price. So again, say, okay, profit is 100 because markup is 100, cost is 100 because it said on cost, and therefore selling price is 200. Okay, so then let's calculate our cost of sales. What we want is cost, which is 100. What we have is selling price, which is 200. Okay, so the calculation, where did I do the calculation? All right, A over here. So 100, what we want, divided by what we have, 200, times 1,700, our VAT exclusive amount there, can you see? All right, and that's how we got the 850. Okay, cool. Right. Next transaction that we had, and final transaction for the Debtors Allowance Journal, was on the 26th. All right, and their trading inventory sold on 25th returned. Okay, and can you see there they told us exclusive of that. Ooh my. So we know sales or sales returns is exclusive of that, so immediately we can take that 5,400, plug it in to the sales amount. Okay, now can you see we have to work our way backwards. Okay, so then we say, okay, what is our VAT? Our VAT in this scenario, somebody tell me, how would we calculate our VAT? They've given us the VAT exclusive amount. How would we calculate our VAT? I need some interactions from you guys. Talk to me. How would we then calculate the input VAT that we know we need to enter in this transaction here? Okay, and you can use 15%, all right, because I know they're going to examine you and test you on 15%. How would we calculate that amount there? Somebody tell me in the chat. We've given us the VAT exclusive amount. We want the VAT amount. Okay, so we'd say 15 over 100. Thank you so much, TK. That is exactly how we would calculate it. Okay, we'd say 15 over 100 times the VAT exclusive amount. What we want divided by what we have times what we have random amount. Excellent stuff. Okay, so just to show you, so you can see, because I see I didn't do the calculation somewhere here. So let's do this. So in my case, I was operating with 14 divided by 100. What do we get? Then times the 5,4. Okay, and what do we get? Okay, and there you see that's where that 57, 56 is coming from. We know that to get the VAT inclusive, we simply add our VAT amount plus our VAT exclusive amount, and we get that right there. And the last thing we need to do is obviously calculate your cost of sales. All right, so then we say what we want is cost, which is 100. What we have though is selling price, which is 200. So 100 divided by 200 times your 5,400, you get 2,700. Okay, and that's what we have over there. All right, awesome stuff. Okay, are there any questions? Any thoughts? Everybody happy? Okay, all right, no problem. So then let's proceed. Let's finish it off, and then I'll give you guys a break after this. Give you guys a break after this. Okay, so they've asked us to do the general journal, and we only have one transaction for the general journal, and that was on the 30th. Grant Zook traders a settlement discount. Okay. So yeah, can you see they didn't tell us whether it was a settlement discount granted or a settlement discount received. Okay. So what we then need to do is to ask ourselves the question, are we Grant Zook traders? No, we are not. All right. If you look up there, say source document of Shemid and Genco security systems for the month of March. Okay, so that's who we are. So this means that this must have been a settlement discount granted. All right, it's a settlement discount granted. Another way to quickly check, look up to see Zook traders. Did we transact with them? And there, can you see on the 12th and on the 13th, it was credit sale of trading inventory. So these are people who have bought from us on credit. So in other words, this is a debtor. Okay. So then again, this has to be a settlement discount granted. Okay. So then we say to ourselves, okay, how much was the settlement discount? Okay, which accounts are affected? Let's start there. We know that, okay, when we first did a transaction with this debtor, we sold to them on credit. So sales, debtors control, and output VAT were affected. But now, since we are having a settlement discount granted, we know that we're reversing those accounts, okay? Or those accounts are moving in the opposite direction. So debtors control, we're going to credit that because it's decreasing. Sales, we know that when it increases, we credit it. So now we're going to debit it because it's decreasing. And then input VAT, we're going to need to use input VAT to reverse the output VAT. Okay, so we're going to definitely debit input VAT because we know it's a current asset. Okay, so debtors control, we plug that in, write it out, and you can put Zook traders in brackets if you want. Okay, you won't lose any marks if you don't. Then obviously we plug in the full inclusive of that amount. All right. Then we move on to the next one. The next one that we have there is sales. We already know that we're debiting sales because it's going down. Okay, but we need the VAT exclusive amount. So here you can see I said 100 divided by 114. That's how I got my 600. Then finally we need the input VAT amount. And that is obviously the difference between your VAT exclusive amount, that's 600, and your VAT inclusive amount, which is the 684. And ladies and gentlemen, believe it or not, that is how we then do the GJ for this question. And there you can see we've written in the doc number and the date as well. Okay. Are there any questions? Are there any questions before we go on to have ourselves a break? Okay. All right, guys. So let's have our break. And then when we get back, we'll just quickly finish this up and see how far we can get with 2014. Okay. All right. So I'll see you guys at 11:21.